Welcome to Retirement Ramblings. I'm Scott, and today is day 292 on my countdown to retirement. So this morning, my wife ran over and picked up her new glasses with the updated prisms, and the driving glasses she got were noticeably improvement for her vision, but the computer reading glasses not so much. So my wife seems to be kind of, I don't know, resigned to the fact that this is as good as her vision's going to get. I don't know. The doctor said that the prisms were kind of part science, part voodoo. Like it was an art, and he's made as many tweaks as he can. He's gotten it as close as he can get it, but obviously it's not perfect. But she did indicate it. It's materially better than it was, so hopefully it'll at least improve her ability to drive with both eyes open, have the appropriate depth perception, etc. Anyway, it is what it is. Then I did my weekly portfolio review like I do every Saturday, and as expected, it wasn't a good week. We were down another 1.07% week over week, and down 3.5% since we reached our peak for the year back on Valentine's Day. Now we are down 6% since the start of 2025, and we're underwater relative to the contributions we've made in 2025 into the accounts. So basically, we've lost 100% of everything that we put into the account. Even though we haven't sold, on paper we've lost everything we've deposited in our accounts this year, plus another, probably $10,000 or so from what we had previously put in last year. So it's not a good feeling. Anyway, I looked up the performance for the week on Seeking Alpha for the various indexes, and the Dow was down 3.1% for the week to 41,488. The S&P was down 2.3% to 5639. The Nasdaq was down 2.4% to 17,754. Only energy and utilities were up from a sector perspective for the week. And then outside the U.S., because people are always talking about, well, if you had international, maybe you were doing better. Well, at least for the week, only China and Japan were up. Everybody else was down. And then in the world of commodities, WTI crude was up 0.2% to $67.18 a barrel. Gold broke 3,000 and closed at $3,001.10 per troy ounce. Natural gas was down 6.7% to $4.31.8. And the 10-year bond was down 0.2 basis points to 4.318%. So then I went to the mailbox and got my renewal quotes from my insurance provider, which happens to be State Farm. And my homeowner's policy increased 7.08%. My personal liability policy went up by 23.45%. That's freaking outrageous. My auto insurance on my wife's car, which is an SUV and is just turning 3 years old, went up by 5.38%. My truck, which is a 2007, went up by 2.27%. So the aggregate premium across everything went up by 8.31%. And this is after going up like 17% last year. So, it's getting to be ridiculous. So, I'm going to shop around again. I'm either going to change companies or I'm going to have to scale back, my insurance coverage, because the monthly premium now across my house, cars, and liability policy is $367.37 if I renew at the new rates. And that's just, in my opinion, excessive. So I'm going to try and figure out how to get those numbers down before May 1st, which is when I need to renew. And then I decided to compare my assumptions in Bolden against um, what the Perplexity AI chatbot indicates are the averages over my lifetime. So, and when I say averages, what I mean is core inflation over my lifetime, which is since 1961, according to Perplexity, is 3.77%. The medical inflation rate has been 5.15%. The Social Security COLA increases has been 3.7%. The housing appreciation rate, and that's since 1967, because I guess they didn't keep track of it before then, was 4.23%. And then I also wanted to compare, uh, you know, the stock market returns. But in all cases, whether it was the core, the medical, the COLA, or the housing appreciation rate, all of those numbers, my values are more conservative than those values. So I'm using like 3.8% as my optimistic inflation rate for core. I'm using 5.22% for medical inflation as my optimistic. I'm using 2.6% as my optimistic on COLA, and I'm using 4.27% as my optimistic on a housing appreciation rate. So I feel pretty good about the numbers that I've got in Bolden relative to what they could be. And then on the returns, I'm using very conservative returns in Bolden based on um, you know what I think I would get over a long haul, being reasonably conservative versus moderately aggressive, which is what I've been most of my life. So the Dow, um, since over my lifetime, has averaged 7.75%, the S&P 10.55%, and the Nasdaq, which started in 1985, 14.06%. And then I said, well, what's the worst sell-offs that have ever happened across those indexes? And for the Dow, it was 33.85%. For the S&P 500, it was 37%. And for the Nasdaq, it was 41.89%. So, you know, I compared, like I said, that to my estimates. I feel really good about the estimates that I'm using. They're super conservative. Then I said to Perplexity, well, for somebody my age, male, has never smoked, doesn't drink, or only on occasion, like, what's my life expectancy? And it came back and said I should live to be 81.31 years old, and in my plan in Bolden, I'm assuming 91. So I'm giving myself 10 extra years that I need to be able to fund past what, the actuary tables would indicate I should live to. And in my family, just for consistency's sake, no male has ever made it past 82 years old. So if I do, I'll be the first. So, go me. We'll see what happens. Then I looked at healthcare expenditures, and Perplexity said that the average cost of healthcare for a 63-year-old, through their life expectancy, comes in between $128,000 and $300,000. The big surprise for me wasn't that amount, because I've heard 300,000 a lot, but it was that if you go with traditional Medicare plus Medigap plus the prescription drug plan Part D, the average person my age would spend, like over two times more, and getting closer to the 300,000 versus using Medicare Advantage, which would be much closer to the 128,000, again, per Perplexity. So in Bolden, again, trying to be conservative, and this was before I knew this, I had assumed my wife would be on Medicare Advantage and I would be on traditional Medicare with Medigap plus the drug plan, just because I have more health conditions than she does. So I figured if there was going to be any kind of serious problem, it would make sense that way. But now I'm going to need to rethink that, because just paying 2x the value doesn't make sense to me. So, again, I get that there's a risk, and this is just an average, and lots of people either are going to be, north of the average or below the average, but either way, I need to think about that. Then, for fun, I said to the AI chatbot, what was the best stock that I could have invested in over my lifetime? Look across the 5,000 or so publicly traded companies. Let me know what it was. And so, what was the answer? It was, I should have followed alongside the Oracle of Omaha and bet on Berkshire Hathaway, because that's what it came back with as the best return over my lifetime, outperforming the S&P, outperforming everything else. So I just thought that was really interesting. Then I said, because my sister-in-law has been thinking about like potentially moving in the not too distant future from where we currently live in an over 55 community, and she was like trying to decide what cities and states and whatever she might want to look at. Anyway, so I asked the chatbot, what states in the United States provide the best tax efficiency for someone over 65? And the answer came back as Alaska, because they have no state income tax, no sales tax, no estate tax, no inheritance tax, and only moderate property taxes. Florida, which has no state income tax, no tax on Social Security or retirement income, but the taxes on property can be high. And since I have multiple family members that live there, I can tell you they can be very high depending on where you are. And then Delaware, which has no state tax on Social Security, no sales tax, and property taxes that offer breaks for seniors. Wyoming, which has no state income tax, low property taxes, and no state or inheritance tax. And Mississippi, which has no state tax on retirement income and the lowest property taxes of any state in the U.S. So that's what I've been looking at today. And that's my update for today. So if you have any questions, any comments, please leave them in the comment section down below or drop me an email at myretirementramblings@gmail.com. Otherwise, I hope you have a great evening. Until tomorrow, take care.